You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is real estate expert Greg Dickerson. Greg is a serial entrepreneur, real estate developer, coach, and mentor. Over the past 20 years, he has bought, developed, and sold over $200 million in real estate, built and renovated hundreds of custom homes and commercial buildings, and started 12 different companies from the ground up. Greg is an expert on the topics of real estate investing, real estate development, and entrepreneurship. He has spoken at industry conferences and mastermind events around the country. Additionally, he has been a guest commentator on Fox Business and The Dave Ramsey Show. Now, prior to getting involved in real estate, Greg served in the United States Navy right out of high school and has always been a leader in the community, serving on the boards of several churches, ministries, and nonprofit organizations. And so, guys, with that, I'm excited to get onto the show with Greg here. But before we do, just have a few quick mentions I want to run through. First and foremost, this is the first time you're tuning into the show. I just want to welcome you here to our family and just thank you for taking the time out of your day to join us here. If you're one of the many millions of loyal listeners that tune in each and every week, I want to thank you for coming back time and time again and making us a part of your weekly routine. We wouldn't be here if it wasn't for you. I love always giving a shout out to a listener that's going over to iTunes, taking the time to leave a positive review for us. And so this week, I'd like to give a shout out to Nick Vole. And Nick says, both Kevin and his guests provide great real-world advice on investing in real estate and generating cash flow. I've begun listening to episodes starting way back from 2014, and the information is just as relevant as it is now as it was back then. So, Nick, really appreciate that. Appreciate you being a listener. And for everyone else that tunes in each and every week, thank you so much from the bottom of my heart, okay? It means a lot to me. For those that haven't taken the time to go over to iTunes and leave a review, and if you feel that our show brings a ton of value to your business on a weekly basis, please, I encourage you to take the time to go over there. It takes literally 2 or 3 minutes, leave a 5-star rating and review, because honestly, it's what helps us attract awesome guests like Greg here to the show, okay? Again, go to iTunes, leave that review. One other thing here before we move on to the conversation with Greg, I recently restarted giving our listeners a free 30-minute strategy call, complimentary strategy call each and every Friday, okay? I do 4 of these each and every Friday. This is something I did when I started the podcast way back in 2014. I did it for a number of years before, basically just getting a little too busy to find those 2 hours each and every Friday. Well, about 4 months ago, decided to revisit that, and I missed it. I honestly really missed it. I missed engaging and connecting with you guys each and every week. And so if you have an interest in chatting with me regarding anything your heart desires about real estate investing, I'm not going to try to pitch you or sell you on anything or try to sell you a coaching program or anything like that. This is really just my way of giving back in a way to hopefully maybe act as a sounding board or just talk shop, okay? It doesn't matter if you're brand new or if you're a seasoned investor. This is the way for us to connect, okay? Go to my website, kevinbupp.com, and scroll down on the right-hand side. There's a button that says Schedule a Call with Kevin. Just go ahead and click that. It'll take you to my calendar. Just be sure to put some details in that link of what you'd actually like to talk about, okay? That way we can be better prepared for the call together. Again, kevinbupp.com to schedule that call, and I'll look forward to connecting with you. So with that, I'd like to get on to our guest for today's show. So I'd like to welcome Greg Dickerson here. Greg, how you doing today, my friend?
Doing great, Kevin. Thanks for having me.
Yeah, absolutely. And Greg, you guys, for those that aren't watching this right now, if you're just listening to the audio version of the podcast, Greg is hanging out in this car right now, and he's actually out in the field. He's on site. So he's actually practicing what he preaches, and that's real estate investing. So with that, Greg, I gave you a little bit of an introduction there. I'm sure it's much more expansive than that. So maybe take a few minutes, tell our listeners a little bit more about yourself and what it is you do.
Yeah, so you hit all the bullet points. The big thing for me is I did not go to college. I went in the Navy right out of high school, and I learned the hard way from the ground up, educating myself. I'm very self-educated, not formally educated. Mm-hmm. And I learned by taking action, by making mistakes, learning as I went through, and worked with great operators, partnered with great people, and did a lot of things. So it sounds like a lot. And, I started out in 1997. My first company, it was just me, my truck and tools. I was a handyman, remodeling contractor. I did $250,000 my first year in sales. I built that into a $30 million company in 7 years. Wow. And started 12 other companies along the way at the same time. So, I like to stay busy. I like to be out. I like to be active like right now. I'm always out in the field. I'm always looking at deals. I'm always checking out the projects. I don't manage the day to day, but I like to be out there. And if I'm going to do a project, especially a ground up or even a building that I'm renovating, I like to be on site, put boots on the ground, grab the dirt, smell it in my hand, feel the walls. I mean, I just like to get the feel for the project, right? There's no other way to get that gut feeling for a project besides standing on the site, looking around, taking it in. I'll visit at night, in the morning, during the day. I mean, that's how you do deals. That's how the business happens, out in the field, on site, boots on the ground. So that's me. And when I have one of these, I just pull over and pop open the laptop and we get it done.
Good deal. Good deal. So how many years collectively then have you been in real estate? I mean, when did you truly dive into actual physically investing in the projects?
So probably 20 years. So I guess my first few years, I was just a builder and I was building my building company. I didn't actually start investing in real estate. The first deal that I did was a lot flip. A friend of mine was a realtor and he came to me and said, "Hey, I know where this lot is. We can buy it for, 100,000. And my dad's got a client that'll pay us 150, and I'm like, "Can you do that?" He said, "Sure." I said, "Okay." He said, "Look, you put up the money. I'll handle everything else." And I didn't have my real estate license at the time. I was just, like I said, I was just a builder investor. So we did the deal and I funded it. He did everything else. We split I don't know, it was 30,000, 50,000, whatever it was. I was pinching myself. I'm like, gosh, is this real? Can you really do this? So that was my first experience as an investor. Now I'd owned 2 houses, prior to this that I lived in, but that was my first flip that I ever did. And then after that, I started building spec houses. And that's ultimately how I launched my building company, was through building big spec houses. I was in a resort summer rental community, Outer Banks of North Carolina, where all the houses were summer vacation homes, short-term rentals.
Yep.
So I kind of cut my teeth in that world and built everything from that point on. But I went from that one lot flip, down the road to the $200 million mark.
Yeah, so it's interesting. So you got your start really in building spec homes, so residential, very much residential related space.
Yep.
But today, it seems like most of your activities fall within the commercial realm. I know that you're sitting there reviewing a potential pad site for a hotel development. You've done retail. I think you maybe mentioned office when we were talking earlier. You've done mostly commercial projects, at least over the past couple of years. Have you completely transitioned away from residential and 100% commercial, or do you still basically get involved also in the residential side of things?
Yeah. I still do residential and I still build houses down on the beach. I did 4 last year down there, through a team down there, not literally on site day to day. I still flip houses. My wife loves to do those. So if something comes along, they're usually higher end, the $400,000 to $800,000 range. So those are the types of houses I like to flip and do. And, I still do infill development and ground up on the residential side. The commercial is more of an emphasis, more of a focus with opportunity zones and things like that. That's getting more exciting. But, let's take a hotel development. So that's a $26 million project, ground up development that can be done from start to finish in terms of the construction in about a year, maybe 18 months, depending on the hotel. Whole project, by the time it's up, done, stabilized, it's a 2-year deal. There's a lot of residential projects that'll take you 2 years that won't even come close to half of that value, right? So commercial just makes more sense in terms of scale. So I'm focusing on a lot of those, and they're actually, from my standpoint, it's just as much time, energy, and effort to do a $26 million hotel that it is to build $1 million, ground up residential home. Almost, I would argue it's less work in terms of, maintenance.
What is the long-term plan? Let's talk about this potential hotel development that you're looking at right now. Assuming that it all goes through, you purchase that pad site and you actually go through this development plan, up to 2-year project, 18-month to 2-year project, $26 million going in price, or, whatever you want to call it, full development price. What ultimately does that back end look like? Is that something that you would operate long-term and hold yourself? Is this something to where you get in and flip it to a full-time hotel operator that is looking for a turnkey product? What is the long-term business plan on something like that?
Yeah, so it's about a 3 to 5 year time frame to get it up, built, stabilized, and sold. And the back end is a REIT or a equity fund or a developer buyout, from a equity partner. So our exit strategy is to sell either our interest or the entire project.
Got it. And then you've done many different types of projects. What would you say if you could pick your favorite asset class between all the different types of commercial ones that you've been involved in and also residential? What would be your favorite of all? I mean, very specific asset class.
Well, right now, hotels, I would say.
Okay.
I haven't done a hotel ground up yet. This is my first experience, and I like it. I really like it. I enjoy it. So it kind of fills me. So I'm a serial entrepreneur. I like to invest in businesses. I like to buy businesses, grow them and sell them. So I do equity capital. as well as partner with people to build businesses, and I coach and mentor people. So a hotel is a retail business within a real estate asset. So it kind of fills all the bugs. And I've got a restaurant background as well as construction. So it's really enjoyable to me. I've really enjoyed really moved into this segment of the market the last year or so, and I've enjoyed learning about it. They're nice, compact development projects that you can do a number of them. It's literally trading the little green houses for the big red hotel, right? So I've torn a lot of hotels down in the past and redeveloped them into residential. That was kind of the thing where I came from. But right now, I think this is my favorite. I've done retail, I've done office, I've done mini storage, developed ground up. I've done some value add mobile home park stuff. I'm really enjoying the hotel thing. And, the only difficulty right now is construction, which in every asset class, construction is a problem. People are busy, costs are rising, but hotels are interesting. I really want to scale this and kind of work this segment. I don't want to be an operator. I like to be a developer, so I bring on operating partners and I manage the development side. That's kind of my fastball.
When you say bring in the operating partners, that means like you actually are doing a joint venture with a team that's going to handle the operations, or do you just bring in like a third-party management company when the timing's right to help with the lease up and stabilization of the asset?
Yeah, third-party management company from the beginning. So they're there from day one when I secure the land and start the vision for the project and put everything together. I've got them involved from day one because there's a lot of things operationally that need to be taken into account, from site selection to the way the site is groomed, to the parking, to the entrance and exit, and everything, needs to be considered, your utilities, infrastructure, everything from the ground up. So I get that third-party management company involved right away, right out of the gate, and work with them along the way. They are my operating partner in terms of the asset, so I still own it and I'm still the operator, but they're doing it. They're not an equity partner. Some of them do come in on equity, but they're a third-party management company. And then the end goal is, there are some, like I said, REITs and equity funds out there that own a number of hotels. So we're a delivery vehicle for them. A lot of those companies don't like to develop. They like to buy.
Sure, exactly. Do they also handle this property management company? Do they also handle the feasibility study as well? Or is that an outside firm that you would have do that prior to getting much farther along in the project?
Yeah, so they'll do the initial feasibility STAR reports. It's, the hotel reports, the STR reports that tell you about, average daily rates and all the metrics of the hotel industry. So they'll come in and do all that kind of stuff on the front end. And then once we get to the point to where we're ready to actually pull the trigger and go to funding, then we have to get some, third party, reports done from third party companies that do the full feasibility and, kind of take basically everything we've done, but put it into an official package, almost like an MAI appraisal, but they are specifically for the hospitality industry.
Got it. And then I know that you're in Charlottesville, I think, currently, and that's where you're based out of as well. And
yes.
But you'd mentioned doing some property, doing developments of these higher end single family vacation type rentals on the Carolinas. What other markets are you in? Or ultimately, what's your range as far as?
So I'm looking actively, on the hotel side and just commercial side. I'm actively Southeast region, so from Florida up to DC, up into Maryland. I do have some relationships up throughout the Northeast, but I haven't done anything really past the DC market. And I really like, especially where I'm at. So we're very insulated with the DC market, federal government. Then we have Charlottesville. We've got the University of Virginia. We've got a strong hospital infrastructure and a couple of hospital networks. So there's a lot of growth there and employment. So this area is kind of insulated. Then you have Richmond, which is our state government, Richmond, Virginia. And then you have the Hampton Roads area, which is, military and huge military demographic there, one of the largest resort cities in the country. So just that region alone, there's so much opportunity and so much going on. I really don't have to go anywhere else, but, I'm open to opportunities, pretty much anywhere, but that's kind of the area that I run, basically from the North Carolina, Hampton Roads area up into Northern Virginia primarily. Okay. But I am looking for opportunities down into South Carolina, Georgia, Florida. I do like those markets as well.
Is it a little more challenging as far as market selection goes? So let's talk about the hotel thing. It's got you excited. It sounds like that's really what you want to put a lot of emphasis into here in the very near future. Your immediate marketplace, right? Like it inside and out. You live there, You've been there, you've invested there. How does that model look as far as the scalability factor when you start venturing out into other markets and really getting comfortable with, a pad site that is, 500 miles away from home? I mean, are there particular demographics that you're seeking that, either work or don't work for this type of hotel development?
Yeah, so you could drill that down because, hotels have drivers, right? So, you can look at different areas where the hotel market is good. There's a lot of old product. A lot of the Marriotts and Hiltons and the IHGs are coming out with new concepts. to kind of replace the old tired concepts. So that's kind of what I'm doing. I'm taking some newer concepts with these franchise flags and kind of expanding on that. So I don't have anything outside of my market right now that I'm looking at, because there's just so much territory, available still within these markets. But, the metrics are the same wherever you go. The drivers for hotels are the same as drivers for multifamily or anything else. You need strong employment. You need, hopefully a college, university in the area, some sports venues, entertainment venues, reasons for people to travel. So those metrics are pretty easy to find and follow. That being said, there's some small towns, all across the country where you have the little travel lodges and motor hotels, and the industry is delivering product to those markets as well. Microtel is a great little, affordable hotel for smaller markets. There's, True, by Hilton and Marriott, and Avid by IHG. So there's a bunch of different concepts that are out there right now that are in the more affordable range you can put in some smaller markets.
What does that relationship typically look like with one of these larger hotel groups when you're actually working it as a franchise?
So you have to get approved. So you get to know them, and it's all about relationships at any level of the business, whether it's, whatever the asset class, it's all about relationships. So you meet the people that handle the franchising, and you get to know them, you develop those relationships, and, you sign up with them, they approve you, you pay a fee, and then, it's in their best interest for you to be successful. So they help connect you throughout the industry with their resources and things like that, to help make your life easier and make the project successful. So they're, in essence, they're like a partner. Obviously they get royalty fees, they get, the franchise fees, but you have to be successful and win for them to win. So they take a deep look at the organization and they vet you just like any partner would, and they're a great resource in the whole game.
And what's the typical length of one of those actual agreements? I mean, it's not forever. So, I mean, does it carry a 10-year your initial term for the most part? Is it longer than that, shorter?
Yeah, they like to see 20 years. Now, if you get any kind of development incentives or what they call key money in the industry, if you get any of that kind of stuff or discounted royalties, they're going to want, 20-year minimum. You can, in some places, get 10 years, but typically they're after the 20-year relationship.
Okay, got it. And as far as financing concerned, what type of debt is available? We can speak to, development projects, right? Ground up developments. What kind of debt's available on your end doing the development? And then also, once you go to permanent, what does that look like?
So typically, equity sources, there's industry-specific equity sources to go after out there, institutional equity that invest in hotel developments, and same thing on the debt side. So there's certain, conduits out there that provide that bridge debt for construction financing, specifically for the hotel industry. And then on the back end, you have the commercial CMBS market for long-term debt. So you don't have the agency debt. That's not available for hospitality. So it's a little bit different, shorter terms. But there's a big market. Debt's a commodity, right? So it's all about the spread. So there's a lot of lenders out there for the hospitality industry, a little bit more expensive, a little bit more risky on the development side, just like anything else. And you don't have that agency debt, available for hospitality, but it's not difficult. Same resources as any other asset class outside of multifamily.
How about this is going to be your first hotel development. Is it a little bit more of a challenge to get that initial bridge debt, being that you don't have a track record in this particular space at this point?
No, because I do have a track record of development. Sure. So, and my partners are engineers, architects that are, not the engineers. I use engineers that are local for the approvals, but the architects are from the hospitality industry. That's all they do. The general contractors, most of them, that's all they do is build hotels, or it's a large portion of their product offering. And then I have the third-party management companies, the hotel franchisees. So that kind of satisfies experience requirements from that standpoint. And, as long as everything else is in place to secure the financing, then they're not worried about it. They know that I can deliver based on my track record, and I have the proper development partners that can deliver as well. But, they still want the financial, guarantees along the way to make sure that the project gets done.
Got it. Sounds good. Well, I want to switch gears a little bit. And, for the most part, it seems like most conversations, whether it be my podcast, other podcasts, it seems they always revolve around the great things that are happening, right? All the highlights, all the best deals, all the money that's being made, the huge returns going to investors, so on and so forth. I love hearing the evil side, the dark side. And everyone's always had everyone that's been an investor for a period of years has run into a challenging situation. It might not be a catastrophic deal, but one that ultimately either created a large amount of stress in their business or they lost financially on it. So with that, would you mind sharing with the listeners, what you would say your worst deal is, and to ultimately, give us a little bit of a background on it as well and what it looked like?
Yeah. So probably the most challenging time, just like anybody else, would have been the 2009, time frame when everybody's loans were getting called, refinancing wasn't available. It wasn't out there. So, I was a builder developer. I was just doing my thing all along the way. Never really had any issues in that, pre-2009 period. Everything was just, it was easy, right? Anybody in the business, it was just easy. You could buy something today and sell it tomorrow for twice as much almost. It just wasn't hard. So I'm no genius or expert. I was in the right place at the right time. And actually, had I been in a different market, I probably could have done a lot more. I was just kind of focused on what I was doing in that area and kind of limited to that area. Mm-hmm. I did invest in a couple of businesses that didn't work out so good, restaurants where I had the wrong partners, lost a bunch of money. But on the real estate front, 2009 was the worst. I had about $10 million worth of equity in properties one day. The next day I was negative. Literally overnight, just like everybody else, that was wiped out. The other challenge was I was a builder. In the market I was in, there was absolutely no work to be had. Mm-hmm. So not only did I lose equity in my properties, I also, lost my income stream. So I had to reinvent. Now I'm a real estate broker as well. I got my license back in 2000 and, as well as a general contractor, but there was just no work. Nobody was buying properties. Nobody was doing, spending any money on properties. Nobody was building. It was a very difficult time. So I had to reinvent myself and get through that time. Now, what saved me, and the best thing I ever did was, number one, was I didn't have any equity. I didn't have any cash out in my deals. So the pre-2009, the routine, you tie the land up. I was the general contractor. I pulled my equity out and got paid to do the projects. So I had no cash out on these deals, and they all cash flowed. I had income coming in, and I had cash in the bank, and they were all non-recourse. They were all in the name of corporations. Each one had their own LLC, so there was no personal guarantee. So I was able to work through a lot of the situations because I didn't have anything on the line. And, and it's the old adage, if you owe the bank $1 million, you can't sleep at night, but if you owe them 10 million, you sleep like a baby. They're your partner, especially when it's non-recourse debt. So that's kind of how I made it through. And a lot of the people that I know at the higher levels, friends of mine that were developers, that were looking at hundreds of millions of dollars worth of issues, same thing. They didn't have equity out on the line at risk, and they didn't guarantee the debt. And that's how you make it through those difficult times. And to this day, I do not guarantee debt. I do non-recourse loans.
Got it. So even on the bridge side, so the bridge that we're speaking of on the hotel, so that is non-recourse as well.
Exactly. Yeah. If they, and that's where you raise enough equity to offset that. So I do those non-recourse, and if they're insistent upon, some sort of guarantee, then I bring on a partner that'll guarantee it.
Okay, got it. Do they require that you actually have any skin in the game, or can you typically just make your development fee as part of the skin?
Yeah, so I can put the development fee as my equity piece into the deal. So I limit my cash that I put into things. I use at this point in my career, after 23 years, I'm all about intellectual capital and equity that I create in the opportunity of the deal itself. So that's how I do deals.
Yep. Awesome. Good deal. So speaking of 2008, 2009, the absolute tragedy that occurred, right? It sounds like you made it through somewhat unscathed. Many others did not. With that being said, obviously that correction came very abruptly, and mostly due to the subprime mortgage crisis that unraveled fairly quickly. Obviously, that is not a situation today that I think we have to fear too much of, but there's obviously always risk out there. It's the longest correction that we've had ever in history. With that being said, what are you doing within your business other than just speaking to non-recourse debt? What else are you doing to essentially mitigate your risk of a future correction or downturn?
Well, it's all interest rates, right? So everything is interest rate driven, and it's the ability to borrow. So what I do is I stay away from deals where a refinance is part of the business plan. So I don't do short-term interest only that has to have a refinance for the deal to work. So if it's short-term, I've got an exit on the back end. And again, it's the non-recourse, it's the zero equity. But the biggest thing is if it's a longer-term play, lock in that long-term debt so that you don't have to worry about a refinance. That's what killed, the market, back in 2008-9. Interest rates started going up. And we saw what happened. And arguably, we could be even further along now had the Fed not raised rates earlier this year, right? You remember last fall, winter into this year, the market started, stinking a little bit all across the country. It was because of interest rates. There is now a mental threshold, a false ceiling, if you will, of 5% on interest rates. As soon as they start approaching that 5% range, and if they get over 5%, it's going to be economic Armageddon again. It's kind of like $3 gas, right? If you're used to $2 and under, the minute gas crosses $3, your lifestyle changes. You make changes in your lifestyle for that $3 gas. The minute you start hitting 5% interest rates, that's going to put a real bad, chain of events into place. And that's what happened in 2009. So I just watch that long-term debt, low interest rates. Don't get yourself into a situation where you're interest only and you have to refi in order for that deal to work at the back end.
Yep.
It needs to work from day one, just like it's going to work in year 5.
Yep. No, great advice. Great advice. So with that being said, going back to the time when you first got into real estate, knowing what you know today, what advice would you give yourself? You go back in time, give Greg some advice back when he's just getting out of the military and stepping into the real estate world. What advice would you give yourself?
So I would have skipped the residential game and went straight into commercial and gone big right out of the gate. And in my position back then, I didn't know anything. So I'd say, hey, had I known I was heading in this direction, I had a different mindset back then. I was doing some construction stuff, but I was more hospitality bent. So I was in restaurants and I was looking more at a career in restaurants and owning some restaurants. So if I could say with an interest in real estate and more specifically in development, I would have went to work for the best developer I could find, learned from them, and then, went out on my own from there. So I would have started in development right out of the gate, but I had to learn. So, I worked a number of jobs and learned trades, learned how to do deals. And I just kind of did what I could do as I went along. But find a mentor, find somebody to go to work for, start as big as you can, as soon as you can, and just go. That would be my advice.
Yeah. So let's talk about that a little bit. Those that are listening in, they, maybe they've got a vision, a dream to, get into the development side of the space, making the mention of like you would have gone to work for the biggest developer, the best developer out there. What value for someone that may have an engineering background or architectural background, someone that, still wants to get into the development side of the space, what value would they be able to bring to a larger development firm?
It depends on their skill set. So, we have to assume they're reasonably intelligent. They have some drive and they're a go-getter. So, the value would be, performing a task that's valuable to that individual, whether it's finding deals, keeping an eye on things, running projects, doing whatever. I mean, it can be as simple as, running mail or whatever they need done, blueprints, things like that. The thing about development, because you do have a lot of different parts and pieces depending on the developer, whether it's residential or commercial, it's the process starts with a vision. So it's about being able to create a vision for a project and then leading a team to the finish line and getting that thing done. And you need a lot of parts and pieces in there. But I think at the end of the day, if you're, what I did was I embraced my age. I embraced my ignorance, meaning you don't know what you don't know. And I'm a seeker of wisdom even to this day. So I approach people and say, look, I'm a seeker of wisdom. I want to learn from you. I'll do anything you need me to do. You tell me what it is. If you want me to run for your coffee, get your lunch, drop off drawings on the way, rake up, clean up, sweep up, whatever it is, I just want to learn this business and I'll do whatever you need me to do. So
love it.
Unless you have some sort of unique opportunity where your family has land or you have a piece of land or something like that, you kind of got to approach it that way. From the standpoint of I'm willing to do whatever it takes. I just want to learn.
Yeah, I love it. I love every bit of it. Just get out there and hustle. Yeah, do whatever you have to do. That's the answer. That's the answer I was looking for. Do whatever you have to do to get your foot in the door.
That's it.
How can you bring tremendous value to somebody else? Everyone's got that intellectual property inside of them. It varies from person to person, but there's absolutely something that you can do that can bring value to that individual or to that organization. You got to figure that out. We can't answer that for you, but there is something inside that brain that can make that company better. You got to figure out what it is. So with that, Greg, lots of great information that we've shared here thus far. I'd like to enter in what I call the golden nugget segment of the show. And this is where we're going to work to wrap things up here for the day. And what I'd like to ask of you is if you got one last final gold nugget laying around in your car there of advice or wisdom that you can leave with our listeners that may inspire and motivate them as they progress in their real estate investing career, what would that one last gold nugget be?
Well, it'd be a couple. So one, education. Continue to educate, develop yourself personally, professionally. Never stop learning. That's been the key to my success in my life and my journey. But the biggest thing is pick a path and just go take action. Find something that speaks to you and just get started right where you are right today. There's so many different asset classes, so many different techniques, so many different models and systems. Pick something, get started, and go. Just get it going. And then once it's going, you can go from there. But you got to get it going. And that's the biggest hurdle for most people is just taking that first step and to get something going. Find something and just go.
No, I think that's great advice. I think a lot of it comes down to that shiny object syndrome, right? I mean, when you're getting started, like it's very overwhelming. There's lots of different paths that you can go down. I'll always like to say there's 1,000,001 different ways to make money in real estate. Pick one, master it, focus on it, and ignore the rest of the noise that's out there, because there's going to be other people chiming in your ear about how they're doing great things in the hotel space or in the mobile home park space or in the retail space or every other space that's out there. But pick one thing, focus on it, and just stick with it until you've actually mastered it. So,
and see, my career, people will look at it and say, oh man, you've done so many different things. Well, okay, so if you're geographically limited, then you have to go wide and diverse in your asset base, right? So, but if you're not limited geographically, then you can go, narrowly focused on your asset base. So if you want to do just multifamily, open up your market. If you want to stay in one area, you got to open up your asset base. So that's kind of how I ended up doing what I did.
That's a great point. Absolutely phenomenal. Greg, this has been a lot of fun. For those that want to learn more about you and what it is you're doing, what's the best place they can reach you?
So gregdickerson.com is my website. All my contact info is on there. And feel free to reach out anytime. I love talking to people, looking at deals, looking at opportunities. I do coaching and mentoring and help people get started in the business, or help people that are in the business grow and scale and do bigger deals and really open up their mind and their vision to things. And, I just love helping people. I've been a coach and a mentor my entire career, and all the companies that I've built and started, and the projects that I do. It's just what I am and how I'm wired.
That's absolutely phenomenal. Greg, thank you so much for your time. This has been an absolute pleasure, and appreciate you sharing all your great advice and taking time out of your busy day, especially while you're out in the field on a project. So it's been an absolute pleasure.
Absolutely. I've enjoyed it. I love it, and I'm happy to do it again anytime.
Okay, great. Thanks, Greg. You take care.
All right, Kevin.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.